Hello everyone, this is Ming Jong. Welcome to today's market analysis for the S&P 500 E-minis futures for the session of 29th of July. So in this video, I am going to show you the market recap on the last session, plus a trade review in the M3 timeframe, which I will include the entry, exits, and the rationale behind. That trade was based on a spring type of the reversal setup and with the effort versus results analysis. And the other potential trade was based on a breakdown of a rising wedge. And going forward, I will cover the bias, key levels, and also potential setup for the session later. Alright, so let's just get started. As we can see in this daily chart for the S&P 500, yesterday was bearish and we have a reaction after we tested the support or the access line at 3230 level. But you can see that the reaction wasn't that threatening. In fact, I think we just barely touched the day low from previous day. That's all accompanied by slightly increasing of the supply level. And let me get down to the hourly time frame for a clearer look, and we can find out a lot of detail in this hourly chart. All right, so you can see that in this hourly chart, one thing that stands out to me was actually this rally here. So this rally started after a localized spring. You can see that there's the demand tail here, a localized spring at the US opening session, and then followed by kind of a bit of the grinding up rally. And you can see that we have slightly increase of the volume here if you compare it to the previous session. But the progress wasn't that impressive. In fact, it just barely progressed a lot. It just touched the access line at 3230 level, which is this orange line here. So you can see that we just barely committed above temporarily and followed by a reversal, and then eventually by this sell-off bar at 3 a.m. my time. So that is the last hour trading. So pretty much yesterday there was presence of the supply and happened right at the access line at 3230 level, and that actually stopped the advancement of the S&P 500 to progress further. And eventually we see this kind of the reaction at last hour trading. And prior to that, in the Asian session yesterday, we have seen kind of the advancement and then followed by a reaction down in the European London session. So overall, I think the key levels to watch is still 3230 level, which has already had happened several times for the price interaction. If I zoom out a little bit here, you can see that the prior swing high actually become the strong, sorry about that, oops, actually become the strong resistance or support level. Quite a few touch here as well, and then recently as well. So anyway, let me just get to the 3 minutes time frame for trade review. So this trade was quite a straightforward. So it actually happened, I think, within 10-15 minutes right after the US opening. But before I dive into that, maybe let me just give you a bit of the background on the levels that I was watching. So first of all, if you recall in my yesterday video, I talked about potential long entry after a test of the breakout bar. I think it's somewhere around there at around 3225 level. But obviously, we didn't really have any chance of the bounce up at this level. So you can see that around 3225 level, we just penetrate straight right into the level and then break below. So definitely no chance at that level. And subsequently, I also talk about possible trade at level below, maybe the swing low here. Um, I think that's the 3208, or even lower at 318090. But that didn't really happen. So this level was actually based on this non-RTH low here. As you can see in this dotted line. Let me zoom out a little bit here. So this is the non-regular trading hours, aka the Asian or European session. Okay, so we have this non-regular trading hours low from here. That's around 3215, somewhere around there, 3215. So this is the kind of like swing low here, swing low again, and that's where the US market opened around 9:30. So first of all, we see that there was another reaction down here, and just spring the non-RTH low here, and then followed by a hammer and then a demand bar. So why did I enter a trade here? So let me just zoom in a little bit here. So I talk about that this is the potential reversal trade based on the non-RTH low here. So that's the first thing. So we hit this non-RTH low, which is great. And secondly, I want you to pay attention to the effort versus results just based on these three bars alone. This, and this hammer bar here. So this three bar actually provides some clue based on the simple volume spread analysis. So if you take a look at this bar, this is the first big bearish bar here. And I think the volume wasn't that threatening. So that's the volume here. And the next bar comes at this here. So we see that comparing to this big bearish bar, the spread is just definitely less than 50% of this bar here. And also look at the volume. So the volume actually increased quite a lot, and that's nearing the non-RTH level at 3215 level. So that actually suggested there was demand come in at this bar as well. But we need to wait for the confirmation. That's why the third bar, which was the hammer bar here, you can see that we actually have very similar volume to the prior bar. So if we compare the two bar here, so this bar and this bar, so they have pretty much the similar volume, but look at the results. So we have a similar effort to push the price down on this hammer bar, and what we get is actually a hammer. So we see this demand tail and suggested there is some buying behind and eventually close near the high here. So definitely a lot more demand come in at this bar. And did it commit below this non-RTH low at 3215? Definitely no, it didn't. So two bars here consisted demand, and then but still we need to wait for a confirmation. So that confirmation actually comes at this demand bar. So this is the bullish bar, and with the green volume demand and showed up in the result as well. So pretty much these three bars formation consisted the demand, and that is where I actually enter the long entry just right after the close of this bullish bar. And subsequently, I waited to hit probably, and I actually anticipated a breakout of 3230, or at least hit the 3230 level, because that was actually a level, quite important level to watch. But you can see that first rally up actually just arrived at the first 3 minutes bar here. That actually provided some kind of the resistance. So subsequently have a reaction down, but the reaction was quite healthy and normal, nothing unusual. And subsequently, we have another attempt to break up to the upside, but it didn't. In fact, I saw this bit of the rejection tail and followed by this bearish bar, this little black bar here. I just exited the trade. So overall, was still profitable. I think it's about reward to risk ratio of around 1.2. So not too bad. Because I saw this kind of the failed attempt, I just can't be bothered to wait for another attempt here, which actually happened here as well, about 11, maybe 11:15 my time here. And eventually you can see that it did break out to the upside and actually break above this 3230 level, but only committed temporarily and failed inside. So anyway, this was my trade. But if you stayed up the whole session, there was another potential trade. I think this is very nice trade and could be very profitable as well. So first of all, let me just zoom in a little bit here. So as you can see, I have marked up this rising wedge. So this is kind of like the rising wedge here. So pretty much rising wedge is have the bearish nature. And if we look at the upward thrust, it's definitely getting shorter as well. So we have some kind of the commitment here, but this is just barely commit above the prior swing high. So definitely the upward thrust is getting shorter, and similarly that's with the up wave as well. I think probably is about the same or slightly shorter here. But anyway, this is a breakout trade if you were to trade that. So first of all, we have seen the shortening of the upward thrust, suggested the exhaustion of the demand here, and then you eventually follow by a breakout to the downside of the bearish rising wedge here. So this is the localized structure here. So I think this bar could provide a good entry after the close of that bar, because it actually break below and committed below the localized support here. Otherwise, the next bar could do as well. So either this or this next bar could provide a short entry to the downside. And I think it's very trendy in this downtrend. So you possibly could ride it until maybe around here. So this could become the profit, and with the stop just slightly above here. So easily a reward to risk ratio of more than 2 in this trade. So usually this kind of trade generally happen in the last hour of trading, like from 3 a.m. my time onwards, about 3 p.m. New York times. All right, so these were the true trade reviews. Okay, let me just clean this and get down to the hourly time frame to talk about the current situation. So I think for today, my bias is kind of neutral for day trading, because I just don't really have any kind of the bias at the moment. So far, if we zoom out a little bit here, the first level of support, which is very important, I'm still watching, was definitely around 3190 level. So prior to 3190, we see that we have some kind of the demand presence on this day. So I think that is 27, just the two days ago. So definitely presence of demand. So in case it just have another reaction down, so this could provide some support level. And another level definitely is 3180 or even 3170. So these few levels are definitely important at the moment. And for the immediate resistance level, still 3230 level, that is the axis line, has been tested many times, whether it's a rejection or support. So definitely this is an immediate resistance that S&P 500 need to overcome in order to progress to more upside. So let's just see what happened tonight. And for the potential trade setup, I am actually looking for, well, I think either a test of the this low here, prior non-RTH low at around, let me zoom in a little bit here. So this is the level around, I think, 3025. Otherwise, maybe around 32110. So somewhere around there. So could provide some kind of the immediate support level that's based on the previous day low or now the non-RTH low. So maybe you could do something like this, bounce up, and that could become a long entry. Otherwise, still possible the short entry at around 3230 level, like the potential trade I highlighted earlier on during the trade review part. All right, so this is the end of the video. Hope you enjoyed it and get something out from the video. So if you like it, just click like and also hover to my name or picture to follow me. Do remember to subscribe to my channel so that you get instant notification of my future video ideas. So as usual, if you have any kind of the comments, suggestions, or trade ideas you like, to share with me or would like me to have a look, feel free to comment it below. I will reply to you. Thanks for watching. I will talk to you soon. Bye bye.